like across the water. Yeah, recording's in progress. That's all good. But yeah, I live across the water from Seattle, Washington, and I work at Rainforest Action Network, where I've been really focused on going after insurance companies for their role in oil and gas expansion, which I'll talk more about later. But yeah, really excited to be here, really value all of the research that Little Sis has done, and also the colleagues here, and all of the campaign works that y'all have been up to. Excited to see so many folks here. I'll pass it over to Amanda.
Thanks, Mary. Thanks, Lauren. Hey, everyone. My name is Amanda Mendoza. I'm a senior researcher and campaigner on climate for Private Equity Stakeholder Project. But today I'm here as a representative from Private Equity Climate Risks Consortium, which is a consortium of several research and advocacy groups, which I'm very proud to be a part of. We call ourselves the PECR Consortium. It consists of researchers from Americans for Financial Reform, Global Energy Monitor, and PESP, Private Equity Stakeholder Project. And we work super closely together on the research and research tools that I'm going to be speaking about today. I'm myself from Southern California, been part of the climate activism space for a while in a bunch of different capacities. So I'm just really excited to be here. Thanks for having me. I'll pass it over to Mark.
Thanks. Hi, everyone. It's great to be here. My name is Mark Normington, and I'm here representing the Vanguard SOS campaign. I am currently based in sunny Portland, Oregon, but you may just be able to detect a hint of an accent. I'm originally from the UK. So I'll go into a bit more detail about what Vanguard SOS is about a bit later. But thanks for the introduction, Lauren.
All right, thanks, everyone. Okay, let's move into the site. All right, fossilfuelfinancehub.org is the site. A little bit of background. So how this whole project came about is that Little Sis, over our time over the past 10 or so years, we've had a climate program. In that work, we've really focused on exposing who are the financiers of the climate crisis. We've worked with a number of groups to put together reports and blog posts on BlackRock, Vanguard, Fidelity. We had a series a couple years back that was called The Power Behind the Pipelines, where we looked at a number of things, but the financing behind pipeline projects. So coming out of that work, we also, I think we're probably all aware too, that there's been an incredible growth over the last handful of years of various organizations, frontline groups that are really picking up campaigns against fossil finance. And there's been also just tons of great resources that have come out at the same time, many of which made by folks here on the call and tuning in today. And so, we saw this as a moment that we could kind of pull together a resource that just compiles a lot of the existing resources and also demystifies this intentionally opaque industry of finance. So that was kind of the motivation behind the site and how it came out. We really want this to be like an on-ramp for people who might be new to thinking about fossil finance or new to campaigns, and want a way to just get started and get plugged into a couple campaigns. We really want this to be like that centralized hub. And so the goals of the site are to learn about fossil finance, learn about a couple campaigns holding Wall Street accountable, and also give you some tools and resources done by a lot of different orgs that are in all of our networks that can really help with your research and in your campaign. So let's head over to the site. I'm going to stop sharing my screen just for a second. And let's see. All right. All right, so this is the site, fossilfuelfinancehub.org. You will see at the top that we organized this in 4 main sections according to really the big kind of players within the financial industry. So that's asset managers, banks, insurance companies, and private equity. And just to kind of step through this for any folks that might be new to thinking about fossil finance. So we start on this homepage by having just some quick blurbs about how each one of these actors are kind of functioning to really finance and uphold fossil fuels. So banks, banks do a lot of different things in addition to holding our money. They also offer credit and cash to fossil fuel projects. They assist with these big mergers and acquisitions to the benefit of fossil fuel corporations, and even have lobbyists that try to advocate against climate regulation. Insurance companies provide insurance necessary for fossil fuel projects to get approved and to get permits. They also, as we're seeing even more increasing impacts of climate crisis, insurance companies are actually withdrawing coverage from some of the communities that are affected most. And if I'm right, maybe Mary will be talking about some of those insurance related campaigns in a moment. Asset managers are kind of this complex entity, but what they do is that they pool massive amounts of money and then invest that on behalf of their clients in fossil fuel corporations, in addition to other types of corporations. And they're often the biggest shareholders too, so they have a lot of power. They, like banks, also have lobbyists and a lot of really deep connections to powerful people. Mark will be talking about Vanguard a bit. And then private equity firms. Private equity firms buy fossil fuel assets and infrastructure from corporations. They operate in the private market where there's like less scrutiny, less regulation. I'm excited to hear Amanda talk more about that, because private equity is one of those categories of the finance world that is really in sort of a shadow because they don't have the same level of regulations. So that's how this homepage is organized. If you click on any one of these boxes, you'll go to one of the pages. The pages are all, have a similar structure where we provide a little bit more information about how these financiers function within propping up fossil fuels. We also link out to deeper dives that are blog posts written by one of my coworkers at Little Sis, Derek Seidman. And then we also have some campaign stories that you can learn about how different groups are fighting against some of these financiers, what kind of direct actions they're picking up, what kind of strategies they're doing, what kind of research they did. And then finally, to help with your research, we have a nice list of some incredible research tools, including databases and ways to look up different banks, asset managers, insurance companies, et cetera. And all these resources have been put together by folks on the call who are attending, folks that we know, and are just really a compilation of resources that we've all found really helpful. If there's anything missing, please let me know. We want this to be helpful. We want this to help with your research and in your campaigns. So that is the quick overview. We also have a couple more pages here that go through, just show the list of campaign stories and have a couple additional research tools, but I'm gonna stop sharing there. If you have any questions about the site, feel free to put that in the Q&A box. Would love to hear how anyone's going to be using the site, or your initial impressions. But with that, I'm going to just turn it over to the presenters and kick it off. Let's see, we have, I think Mary is up first. Yeah, okay, I'll pass it to Mary.
Hey everyone. Yeah, so I'm here to give you sort of like an insurance campaigning 101. And just so that folks can think about how they could apply it to their own campaigns. It's covered pretty well on the website that Lauren was just sharing. But just wanted to highlight like a few more personal stories in relation to this work and like the reason why I spend my time going after insurers. And so basically, I grew up fighting a pipeline in British Columbia. I saw that someone's calling in from Vancouver. I used to live up in Vancouver, BC, where the Trans Mountain Pipeline was being constructed through where I was living. At the time, there were a whole series of different blockades. We went through everything from fundraising for legal challenges from First Nations that were fighting the pipeline, to doing aerial blockades, to blockading their drill sites, to all sorts of different actions. And through the course of that work, I found that we even were able to kick out the major company that owned the pipeline out of Canada. And then the Canadian government bought it. And so that completely changed the entire financial landscape. Originally, we were doing a lot of different pressure around the banks also. And while the banks continued to loan financing to the pipeline project, the Canadian government decided to buy it and then criminalize everyone who was doing land defense. And so from there, we decided to explore different avenues of pillars that were upholding the construction of this pipeline. And for years, one of the local Indigenous leaders, Reuben George, had mentioned that he wanted to go after the insurers, but I didn't really know what that meant. So my friend Selekshna really did a lot of research and found that she was able to find the insurance certificate behind the project. From there, we were able to do a pressure campaign where we pushed like over 20 insurance companies away from the pipeline and caused major financial turmoil in Alberta and across BC for the pipeline company. They still are struggling to find insurance. Unfortunately, the Trans Mountain Pipeline has been completed as of like 2 weeks ago, which is awful because people have been fighting for like a decade. But all that to say is that it felt like one of the most important ways during the pandemic, and also from when I moved down to Washington State, a way to actually do solidarity campaigning that created a material risk for the project. And so that to me is really where the insurance campaign shines, is the ability to cause financial chaos, because basically they need insurance in order to be able to operate the same way that you need insurance if you want to buy a house or drive a car. The pipeline companies need insurance in order to be able to operate. And so we've applied the same theory of change to multiple different pipeline project fights. It can also be applied to police foundations. It can be applied to, I saw someone's from the Starbucks workers union. I'd be curious about what Starbucks' relationship with a few different major insurers is. You can apply it to basically any social movement. And insurers are a lot more sensitive to pressure than banks are, for instance, because the insurance companies just aren't used to being politicized. They now are getting drawn into a lot more politicization because of the climate crisis and the impacts. But basically, insurance companies provide insurance, which is a key lever to any major project that you're fighting. And so it can really like mess up their whole financial system if you're able to get insurance companies to withdraw. Insurers also renew on an annual cycle. So there's a lot of opportunities to get them to drop, because basically they have to refile for an insurance certificate every year, which allows for a rapid change. What else to say about insurance campaigning? I would just say that it's one of the most opaque industries. And so we included some research tools in the Fossil Fuel Hub as a way to like help hint at ways that you can research. The communities that we're working with currently are fighting a lot of the methane gas expansion in Texas and Louisiana. There's major methane gas expansion. If you look at a map, frankly, it's really shocking the number of people that are going to be impacted by multiple facilities along the coastline in hurricane-prone areas. And methane gas is actually worse than carbon for the climate. And so it's a really urgent issue. So even though I live up in Washington State, I've been helping communities in Texas and Louisiana fight those projects because of the urgency of the climate impacts, as well as the environmental racism of those projects. So yeah, if people are interested in any insurance questions, feel free to reach out to me. The resource I wanted to point people to that shows like all the ways that the, oh wait, okay, cool. I was trying to see what all was in the chat. There you go. If people want to reach out to me with questions, feel free to. This Insure Our Future page also has like more information about some of the companies that we're targeting. We've been focusing a lot on Chubb, that's New York City based. And so I saw someone that is here from Summer of Heat. We'll definitely be in the streets for that. And we've been highlighting AIG and Chubb and Liberty Mutual primarily because they're some of the worst actors. So when we look up these methane gas facilities, often their names are the ones that are providing the insurance for this. And so without insurance, companies can't get bank loans. So I think that's also one interesting, like all of these different finance campaigns are all touching each other in really intricate webs, which I think Little Sis does a really great job of visualizing. But for instance, when like insurance companies can act as investors, they also provide the insurance in order for then banks and private equity and asset managers to buy up. And so they're all like in bed together and working deeply together. And so I think that if you choose to go after any single one of them, you're impacting all of them as well. Yeah, I think I will check there.
Okay, thank you so much, Mary. Super interesting to hear about insurance campaigns. Feel free to check out Insure Our Future. Mary dropped a link in the chat. And with that, I'm going to pass it over to Amanda.
Yes, hey again. Thank you so much, Mary. I really love, like you were just saying, learning about all the ways we can come together to fight for climate justice and the expansion of fossil fuels and just tackle this in all the ways that we can. We know that they're all working together, so I'd love to see us be able to like work together more. That's why we're all here today doing the work that we're doing. And thank you to Lauren and Little Sis for bringing this hub together. It's an honor to be here. I'm excited for the opportunity to be able to share a bit more about private equity and how it contributes to climate chaos and why it's important to include private equity in this growing fight for climate justice. They hold a lot of money, so I'll get to some of that. It was shocking for me to learn as someone who I said has been in the climate justice space for a little while in different capacities. My kind of entry into this world was at Standing Rock, another pipeline fight that, you know, really changed my life and the trajectory of my life and brought me into this work. So I'm really grateful for that. Again, my name is Amanda, and I'm here today as part of the Private Equity Climate Risks Consortium. So first, Lauren, if you wanted to share the private equity page, there's going to be a lot of like finance speak thrown at you guys that I've had to learn. So maybe it will help to just have a little bit on the screen. So first we'll talk about private equity. What is it? Private equity firms are investment management companies that invest in and acquire companies through capital raised by wealthy individuals and institutional investors, such as public pension funds and university endowments. So a lot of people are connected to pension funds. A lot of people are connected to universities. So there's lots of ways that we can engage and sort of push these actors to make change in this space. Investors in private equity funds are known as limited partners. They invest in a specific fund while the PE firm is fundraising, anywhere from tens of millions of dollars to hundreds of millions of dollars per fund. Some of these funds have a minimum requirement of like $250 million of a commitment to these funds. So we're talking about really large amounts of money here. And once it's committed to a fund, that money is considered illiquid. It is locked into the fund for 5 to 10 years to be managed by the private equity firm. And the firms use these funds to invest in and acquire companies that are not traded on the stock market, which was what Lauren was talking about earlier. And because they're not public companies, they have very little regulation, very few public disclosure requirements, even to their own investors. So throughout this work, we find that many times the investors or the limited partners are not even aware of the specific companies or assets that their money is funding, which is why we're here, which is why we're doing this work, to educate, bring awareness, engage in what these private equity firms are doing and where these big public entities are putting a lot of their money. So I want to spend a couple of minutes on just how private equity makes money, and then we'll shift into sort of the more climate specific stuff here on the page. So private equity firms, they buy up companies. The goal is extracting as much profit as possible by making them more financially efficient, usually engaging in really extreme cost-cutting measures and then selling them for profit. Another way that they sort of ensure their success is private equity firms, when they acquire the company, they use a really small amount of equity and a significant amount of debt. It's usually like 80% of debt to buy these companies. And the debt is guaranteed by the portfolio company, not the private equity firm. So the private equity firm is not on the hook if the company defaults. So this high debt load magnifies the gains for the private equity firm, since the debt is guaranteed by the portfolio company and the losses are minimized for the private equity firm. So what we see is a lot of bankruptcies, a lot of folks losing their jobs, definitely in other sectors of the economy. Healthcare is a big one. We see lots of hospitals are closing because of this. And like, we all know that healthcare shouldn't be for profit anyways. And then to have private equity enter that space is pretty terrifying. So why do pension funds continue to invest in private equity? Because the returns tend to target between 15 and 20%. So it's a lot of money, but is it worth the costs? So how does private equity contribute to climate chaos? Through our research here, we found that private equity firms invested in over $1 trillion in energy since 2010, which rivals some of the big banks' investment in fossil fuels. PE firms are really busy buying up offshore drilling in the Gulf of Mexico, propping up fracking operations, and prolonging dirty fuel usage by building infrastructure like pipelines, LNG export terminals, which Mary alluded to, spoke to a little bit as well, which are just super polluting. And they also pollute through their big portfolios of gas and coal power plants. Private equity really sees an opportunity in oil and gas, because we are in a moment where some big oil majors are starting to like sell off some of their dirtier assets to like clean up their portfolios. We're seeing other public entities starting to divest from fossil fuels. But then private equity just kind of swoops in, picks them all up, brings them into the private markets, brings those emissions into like away from public eyes, which makes, you know, this work all the more important. And on that note, some of a bit of research that we found from 2021 to 2022, just a little sample of this. Private equity firms acquired at least $25 billion of oil and gas assets from the public markets. So that was just in a 1-year period. And this is just a continuation of a larger trend where oil and gas assets are transferred from the public markets to the private markets, masking their emissions. All their negative effects are taken away from public view. And some of the largest North American diversified firms are KKR, Brookfield, Carlyle Group, Blackstone, all of which are profiled in more detail on the Climate Equity Risks website. But before we go and take a look at that, I wanted to highlight a few of the campaigns and uplift a few of the campaigns that some of our research is supporting. Thank you, Lauren. So right here, this is uplifting the work of the Private Inequity Coalition, a global network of academics, investors, organizers, frontline communities, working together to try to get private equity firms to stop investing in these projects that drive climate change, that perpetuate environmental racism, violate indigenous rights, cause harm to workers, neighborhoods, and local communities. And KKR is the main focus right now. And our newest report that is supporting this work found that just in 2023, KKR's fossil fuel portfolio included 188 fossil fuel assets around 21 countries that emitted at least 93 million metric tons of emissions. That's pretty shocking. And just to highlight sort of the extreme level of discrepancy we're working with here. KKR's own sustainability report, they reported way less than what we found that their emissions were for that year. We found 66,500 times more emissions than what KKR themselves reported. So that's really why we're doing this work. They are able to kind of say whatever they want with no accountability. So we're definitely here to change that. So here on the site, there's a few KKR-owned assets that are facing community resistance due to degrading environmental and community harms caused by these projects. And I just invite you all to take a look to read about them. And then if we can scroll down a little bit more, I'd like to highlight one more campaign, which Mary also spoke to. It's one of the LNG terminals that is proposed. It's called the Rio Grande LNG terminal in South Texas in the Gulf. It's backed by the PE firm Global Infrastructure Partners. And if built, this project is estimated to emit the emissions that are equivalent to 44 coal power plants every year. So we know methane gas, LNG, is not the bridge fuel that the industry loves to call it. It's really polluting, it's really terrible. And this is a really big example of sort of that awful change that would come to this place. This terminal would significantly degrade local fishing, shrimping, natural tourism industries, and really the community's livelihoods. So you can join the South Texas communities, the Carrizo Comecrudo tribe, in demanding that GIP cancel the Rio Grande LNG project by sending an email. So that will be in the call to action at the end. We have the link there to do that. And just in my last few minutes, sorry, I've been throwing so much at you guys. If we scroll down a little bit more, I just want to highlight a couple of the research tools that we've added here. The first one is called the Private Equity Energy Tracker. It includes the current energy companies owned by 8 of the biggest private equity firms. It's a database, it's sortable, it's downloadable, and it also is going to be undergoing a really large update in like 2 weeks, where we're going to add the energy portfolios of 12 more private equity firms. So we're really excited about this tool. It's a start at doing what the PE firms refuse to do themselves, which is disclose their energy portfolios to the public and to their investors. So this hopefully will be a helpful tool for folks in this room who are working on some amazing campaigns. We have a few more resources here that I think would be really helpful, and we're really excited that they were included on the Fossil Fuel Finance Hub. We're always available for questions and ways that we might be able to contribute to the amazing work everyone here is doing. So I just want to offer folks to reach out to me. If anything on private equity comes up, you have any questions, we might be able to work together on any of your campaigns. We're always looking forward to collaborating. So again, sorry I threw so much at you guys, but I'll stop here and happy to answer any questions at the end. Thank you, Lauren and everyone.
All right, thank you so much, Amanda. You know what, I'm gonna drop the energy tracker in the chat in case anybody missed that. Definitely check that out. And I will pass it over to Mark.
Great, thanks so much, Lauren. And if you'd be so kind as to get my slides up, that'd be wonderful. So hi, everyone. I'm going to be talking about asset managers today. I think asset managers often aren't as well known financial actors as banks or insurance companies, but they play a critical role in financing the climate crisis. So today I'm going to be giving a very basic introduction to what asset management is, who Vanguard is, and how they're involved in keeping money flowing into fossil fuel companies. I'll also be talking through what the Vanguard SOS campaign does and how you can get involved if you'd like to. So if you've never heard of asset management before, hopefully this will get you to a place where you know a bit more about it and why they're worthy of our attention. Also, apologies if you are already familiar with some of this, but I'll do my best to keep it brief. So next slide, please. So what are asset management companies and what do they do? In a nutshell, asset managers invest their customers' money on their behalf. That could be individual investors, institutions, or really anyone who has capital that they want invested. But for most people, they're most likely to come into contact with an asset manager through their retirement fund. So if you have a 401k, chances are it will be invested into one or more funds operated by BlackRock, Vanguard, Fidelity, State Street, or one of the other big asset managers. But even if you don't have money invested with an asset manager, they've become such important players in the economy that their actions impact all of us, which I'll come to a bit later. So these asset managers, they take your savings and invest them in companies with the hope that that money will then grow over time. So rather than having to do your own research into the stock market and individually pick which companies to invest in, the asset manager simply does it for you. And in exchange for this service, the company charges fees. That's normally a percentage of the amount of money that you have invested with them. Next slide, please. So probably the biggest innovation in the asset management industry came in the 1970s, and that was when the founder of Vanguard developed the first passively managed index fund. So what's that? Well, the idea is, rather than having a team of analysts researching companies, diving into their quarterly reports and trying to work out which ones are going to grow in the future and invest in those, you simply buy a little bit of a very large number of companies. For example, the S&P 500, that's an index of the largest 500 publicly traded companies in the US. This has two major benefits. First of all, it greatly reduces risk because rather than betting on the performance of any one individual company or a handful of companies, which could significantly fluctuate over time, by investing in an index fund, you're essentially betting on the overall performance of the US economy. Secondly, it enables the asset manager to massively reduce the price that it charges for these products. Because they don't have to pay the wages of the team of analysts, etc., that would be needed to manage the fund actively, they can offer these products to customers for rock bottom fees. So think of it as the Walmart approach to investment management. They're cutting overheads and margins as much as humanly as possible in order to keep costs low in the hopes of attracting a large number of customers who care above all about price. So these funds proved to be very popular to the point where earlier this year, we reached a tipping point where more assets were controlled by passively managed funds than by actively managed ones. They also enabled Vanguard to grow into the behemoth it is today, with around $9 trillion in assets and millions of customers. Okay, next slide, please. But it also had some serious side effects. So firstly, by not being very picky about which companies it invests in, Vanguard owns shares in a lot of environmentally and ethically terrible companies. That includes about $270 billion in fossil fuel companies, making it the #1 investor in fossil fuels worldwide. And that means that when people buy Vanguard funds, they're often unknowingly helping to prop up the fossil fuel industry with their own money. And a lot of the time, people may not even have a choice, as their employer may only give them a limited selection of funds to choose from when setting up their 401k. Secondly, by growing so large and buying shares in so many companies, Vanguard has reached a point where it now owns about 10% in every publicly traded company in the US. That gives it a tremendous amount of power, both because of its sheer economic weight, but also voting power. Because when you buy a share in a company, then as a partial owner of that company, you gain certain voting rights over its business decisions. But if instead of investing in that company directly, you invest through an asset manager, then the asset manager will vote on your behalf. So Vanguard is able to vote on behalf of all these millions of customers that it manages their investments for. Can we have the next slide, please? So how does Vanguard use its power? For the most part, it uses it to simply uphold the status quo. In the vast majority of cases, it refuses to engage with the companies it invests in to encourage them to decarbonize their operations. It offers hardly any sustainable investment options for its customers, and it has consistently voted down attempts by shareholders to hold companies accountable for their lack of climate action. Okay, next slide, please. So we arrive at a bit of a paradox where at the same time, Vanguard holds a great deal of power over the US economy and by extension, the global economy. But on the other hand, it refuses to use this power in an environmentally responsible way. And even worse, it denies that it has such power in the first place. And when we take up these matters with Vanguard and criticize them for their inaction, they claim, well, we can't do anything. These are passively managed index funds. They just follow the market and can't get directly involved. So this is where the Vanguard SOS campaign comes in. Our mission is to challenge this view and get Vanguard to use its economic and voting power in a way which takes into account the existential threat of the climate crisis. Okay, next slide, please. We do this by mobilizing Vanguard customers, clients, employees, the climate movement, social movements, and civil society organizations in order to put pressure on Vanguard to do the right thing. And research plays an important role in this. For example, one of the major counter arguments we get as to why asset managers can't decarbonize their investments is that they don't want to lose their clients' money. It's the accepted wisdom that the fossil fuel industry is a big money maker and their clients don't want to miss out on this opportunity. The problem is this isn't true anymore. Next slide, please. Recently, we did some research with As You Sow and the University of Waterloo, which showed that over the last 10 years, the fossil fuel sector was actually the worst performing sector in the economy, to the point where being invested in this industry actually costs Vanguard clients billions of dollars in lost potential returns. So divesting from fossil fuels isn't a battle between the head and the heart or between your wallet and your conscience. It's actually the best of both worlds. Okay, next slide, please. So that takes me to the end of my presentation. Thanks so much for listening to me. If you'd like to get more involved with the Vanguard SOS campaign, you can head to our website. It's vanguard-sos.com. Click on the Get Involved button in the top right, and there you can find a link to sign up to our newsletter to stay up to date with the campaign. Also, several actions you can take to keep pressure on Vanguard. For example, just last week, it was announced Vanguard is getting a new CEO. So this is a rare moment of transition for the company and a chance for us to push them to change direction. So thank you so much.
All right, thank you so much, Mark. Thanks to everyone, Mary, Amanda, Mark. I hope that these presentations really hammered home the point that yes, we are engaging with very powerful institutions here in the finance industry, but at the same time, there are really robust campaigns that are making very strategic decisions about pressure points and finding those vulnerabilities right now and really effectively pushing back. And these are campaigns that you can get involved in too. So with that, I think we might have some questions. So I am going to switch over and let my colleague Jen maybe go through some of those questions if she doesn't mind.
Yeah. All right, folks, we have a slate of 4 very interesting questions. We're going to start with a really easy one for Amanda. Could you explain to us, what does it mean for private equity companies to, quote, use debt to buy companies?
Yeah.
Go ahead.
So they get debt from banks and buy it and use it to purchase these companies. It's really tricky, and it's not all part of it that I did not go to school. I'm not an economist, so this is me trying to figure it out. But it's just a maneuver that they have been able to figure out as part of the private equity strategy, in order to take on as little risk as possible. So if they're buying these companies with debt that they then leverage onto the company itself, they really escape a lot of risk. Yeah, leveraged buyout is what it's called. And it will have a much better explanation than me giving you that. So apologies.
Appreciate that. Some good Google language put in the chat by Mary. Okay, so this one is a little more complex and might require doing another screen share to look at the website, but it's 2 different questions I think get to the same thing. So the first question is, a small Buffalo, New York area bank just came out against the New York Heat Act, which climate organizers are pushing hard to pass in New York State's legislative session. Can you talk a little bit about how someone who might be interested in learning more about like a specific bank could use the resources that are on this website, or are there other resources that you might point them to?
I actually am not sure. So, okay, I work mostly on insurance stuff. My friend Caleb works mostly on bank stuff that helped contribute to the website. So they might have better ideas on how to answer this exact like small banks question, because I'm pretty sure that the website that's linked with the most comprehensive bank data, the Banking on Climate Chaos, actually only has the top banks. And so I don't think that they would have the smaller bank. So unfortunately, you might be out of luck. I would also try to figure out, so if the Evans Bank, I would contact them, but I would also probably do like a Freedom of Information Act request or a public records request around their correspondence regarding that bill, because probably they got contacted by a lobbyist in order to wind up coming out against that bill. So I'd be really curious about like why they're taking that action if it's a smaller bank. And especially if you're a member, they might be more likely to listen to you, or if you find someone that has an account there, they'd be more likely to listen to you. But unfortunately, because we're talking about some of the largest impacts from these different companies, often we focus on the largest fossil fuel companies and also the largest banks on the bank side. So sorry, I don't have a better answer to that.
I'm also seeing some contributions from folks in the chat that are saying there are more banks in the Investing in Climate Chaos database, also some bank profiles on banktrack.org, and also bank.green might have something that you're looking for as well.
Great. Thanks, y'all. So on to some confusion around private equity. Could you explain the difference between private equity and asset management?
I think it's the fact that it's in the private market, it's not on the public market. And maybe other folks can speak more to like asset managers, but I think they're generally public. And they have to disclose sort of what's in their portfolios in a way that private equity doesn't have to do that. So another part of sort of our strategy and in this campaigning work is pushing for more regulation from the SEC to hold private equity firms to the same like level of standards that public companies are held to. So that's another sort of top-down method that, you know, we're always trying to pursue, also working on other pressure points as well.
That's great. And then this is a chunky one, so it might be our last one, but there've been a couple questions about divestment as a strategy generally. I think this one's pretty apropos. How can university students best incorporate these resources into divestment campaigns across each area, private equity, asset managers, et cetera? So how could students use this site for work that maybe they're already doing or that they're interested in deepening?
So to me, students are actually like really well positioned to make impact in all of the different companies that we've listed, because so when you think about the baby boomer generation aging out of the workforce, a lot of the private equity companies, the asset managers, the insurers all have an aging workforce. And so they're all desperately trying to recruit. They spend like billions of dollars on recruitment across the whole sector. And so if you go to school in Boston, for instance, you'll see Liberty Mutual at your campus trying to recruit you at career fairs and stuff like that. Same thing with if you're going to school in New York, you'll likely be more likely to interact with KKR or some of the other major private equity companies that are headquartered there. So what I would do is actually think about divestment, like divestment college campus campaigns actually showing up as a way to kick those companies out of student fairs and out of being able to recruit people on campus. But I do see that there's another question around divestment overall and the strategy of change there, but just wanted to respond to the college specific piece.
Yeah, I could hop in if that's all right. So we have worked with some students at Harvard. David Rubenstein, who's the founder or co-founder of Carlyle, sat on the board of the Harvard Corporation, and we sort of supported the students in calling him out and getting him to step down, and he did. So there's kind of like a name and shame element that you can do. And there's already lots of great divestment movements on these campuses, and just including private equity and some of these other entities we talked about today on that, I think would be really helpful in sort of making a move on that. I can speak a little bit to I see that there was a couple questions about divestment as a strategy in private equity, and the reason why our strategy tends to be more about engagement is because the money is locked in, right? So these pension funds invest their monies in for like 10 years, and it's really tricky and really expensive to pull their money out once they're invested in private equity. So for us, we see these pension funds, university endowments as sort of customers with a lot of power at their hands to sort of push them to engage the private equity firms to stop investing in fossil fuels, to retire assets that are in their portfolio. And then we sort of try to find those moments before they commit to a new fund to try to get them to not commit and to say, these are the reasons why, because we don't want to invest in fossil fuels. We want to make sure our portfolios are getting cleaned up. So divestment is tricky with private equity specifically because it's at least the way that the system works, they can't just pull their money out. So you need to find ways to leverage the power of the limited partners in order to make change and push these private equity firms. So it's a tricky game.
Yeah, and I'll add that universities are some of the biggest institutional clients of asset managers. So they actually have a fair bit of negotiating power to get in touch with these asset managers and say, hey, you need to improve your offerings of sustainable funds, otherwise we're going to move our money out. So yeah, talk to your lecturers, find out where the university's 401k is invested, and see if you can organize them to ask their plan managers to make that change.
Great. Thanks, everyone. Thank you for these questions. There may be a couple stragglers, but in the interest of time, I think we're going to try to close out pretty soon. Feel free, I'll have my email at the end of this presentation. Feel free to send me some questions. I'll try to get back to you. Additional resources would be great too. Let's scoot over to ways that, we all could take action today. Let's do this. Okay, great. So a couple things. It'd be great if someone wouldn't mind also putting these in the chat, but Mark, if you want to talk through the Vanguard SOS email blast.
Yes, as I mentioned, Vanguard is getting a new CEO. For the first time in its 50-year history, it's getting someone as its CEO that didn't previously work at Vanguard. So this is a major change at the company. And so we really want to make the most of this as much as we can. So we're asking people to send an email to Vanguard's board, basically calling on them to hold the new CEO accountable when he starts in July, and make taking climate risk into account a priority.
Great. We also have a petition that Amanda mentioned about the Rio Grande LNG. Amanda?
Yeah, so that's just, if you click the link here, it'll open up a form for you to fill out where you can email GIP directly, asking them to not move forward with this project. So yeah, hope you have an opportunity to do that.
Awesome. We also have this link from Insure Our Future. Mary, if you want to talk anything about that.
Yeah, this doesn't really have like a specific call to action. It's more like if you want to figure out how insurance would apply to your theory of change, it's one of the hubs of resources that you can use. And so like I saw a question about hydrogen in the chat, for instance, if people are fighting various projects, you can feel free to get in touch with me, but also feel free to poke around on that website to see what type of pressure campaigning we've done and just copy it if you want to.
Great. I'll also plug, this is a link from our friends at Third Act. They have a campaign right now. They have this pledge where if you are a current customer of some of the major banks or want to pledge that in the future you will not be a customer of some of the major banks if they don't change some of their climate practices, you can sign up for this pledge. I think that would be really nice thing to do. Also, all of us here are members of the really incredible Stop the Money Pipeline Coalition. It's a group of about 200 organizations that are fighting fossil finance right now. So they have plenty of ways to get involved and ways to take action on that website. And also, I just wanted to plug that many of the orgs here and attending this webinar today are participating in the Summer of Heat as part of the Stomp Coalition. Learn more at summerofheat.org, but there's going to be really a sustained campaign of actions throughout the entire summer to hold some of these financiers accountable. So hopefully, you know, maybe we can just kind of wrap up here, but hopefully everybody on the call got a bit of an intro if you are new to fossil finance about what it is and how some of these firms operate. And also, you know, how you can take action too, how you can get plugged in with some really rad groups. And I would love anyone here, if you have thoughts or feedback about the site, feel free to stay in touch. Again, my name is Lauren. My email is up here on the screen. We have all of our social medias that, you know, we are in the ether, we're in there. We also have a newsletter. We have free monthly training series that is called Research Tools for Organizers, where you can learn introduction into doing power research. Feel free to sign up at that link. I'll be sharing the slides over email after this. And if you want to support our work, there's also that link down there too. We would really appreciate it. So thank you to all of the presenters today. It's been such a joy working with each of you and really inspired by all of your campaigns. And thank you everyone for hopping on today. Have a good rest of the week.
Thank you. Bye.